Good evening, ladies and gentlemen. This is Clueless Trading Frank. This is a free market update webinar, very important given what we're going through right now, which I think everyone understands very well. This session is going to be uploaded to the Clueless Trading YouTube channel, where all members, free trial subscribers, and even all your friends can access the YouTube channel, the Clueless Trading YouTube channel, and listen to it for free. Keep in mind that we don't, at Clueless Trading, we don't really do any major outside marketing. So all the stuff, all the content that's put out for free, not the private Twitter feed that's reserved for paid members. You still have to pay the bills. But all the content put out on the YouTube channel and the free public Twitter feed that's connected to StockTwits, that's Clueless 8FR, like Frank Robert, right? Clueless 8FR is available to anyone who wants to see a slice of what we do within the community of Clueless 8 Trading. So do spread that word around to all your friends and people who might be interested in the market, and it helps us with our organic marketing. And most importantly, like I always tell everyone, is referrals, a couple of shout outs here and there on different forums and stuff that you might be in. Remember, a lot of traders are not just on one service. They're in many different services, and that's good because after all, there is no one voice that speaks for the market. I am simply the Clueless 8 Trading voice. There are many other brilliant people out there who have their own opinions and voices, and to do spread the word around on what we do, and that's the only thing that I request. So saying all that, before I get into the markets and stuff, a couple of comments which I think are very important. Number one, these are probably one of the most bifurcated markets. I shouldn't say the most volatile. Yes, they're volatile, but the most bifurcated markets in the sense of different sectors doing different things at any given day. I mean, just let's take an example today. We had the Dow Jones, fantastic, up 70 points, no complaints. The NASDAQ Composite, down 72 points. Wow. You would think there was some correlation between the markets, right? You have the Russell 2000 down 8-9 points. That's almost 0.7%. And then of course you have the NDX, which is the Nasdaq, down 1.6%. You look at my screens here, all these screens that I'm looking at, and I wish I could just have you all guys around here, having a nice drink and just looking at these screens and crowding up my little office space, my command central. So many red symbols and then a bunch of real bright green symbols. So sometimes as traders and as investors, we wonder, well, why can't we always be in the green, on the green part of the equation? Well, it doesn't work like that in life. It doesn't work like that in life. If you lump into one area all the time, you have a pretty high probability, in my opinion, given my experience, of getting slaughtered. Because just like the game of, like game theory, if you're all, it's like when you're driving on the highway and you're like in a loggerhead, just let's say it's a 4-lane highway, right? And everything's moving slow. You're like, honey, I'm going to move over to the right side. The middle lane is moving faster. So you move to the middle lane. What happens after 5 minutes? It slows down. And then you're like, oh boy. And so, oh, now I'm going to move back to the left lane. Move to the left lane. What happens 5 minutes later? It slows down. It's the same thing with markets. the masses overall, there's a herd mentality in markets, okay? It's always like that. We're all guilty of that. We look at prices running up, here's a breakout, here's this, that, boom. And most retail investors, just in general, tend to come in on the upper end of let's take a look at the S&P 500, for example, upper end of a big move. That's when they start to feel comfortable. They're like, oh yeah, I'm going to get in there. I'm going to get in there. And this is, for example, I am looking at, let's look back from the election time, right? So here is your chart of, oops, sorry, trying to juggle this around in between my comments. It'd be nice if we were in a big convention hall or something, and there I'm standing there, with my clean clothes on and just saying, hey guys, welcome to this religious Clueless trading experience, but it's not like that, right? This is a webinar. So here we are, in the midst of that large after hours crash on the S&P 500 on election evening, Tuesday, November 8th, and then this massive move. I've always said one thing: the biggest money is made in the first 24 to 72 hours. That's when you have to act. That's when the big aggressiveness has to come in. And that's where the maximum, I call it MA, maximum aggression, not moving average, maximum aggression. But guess what happens? It doesn't work like that in real life. No one does that. No one does that. This was a complete replication of what happened during Brexit. And that's the continuation channels. So when you look at the continuation channels, they're continuing. They're going higher. They're going higher. It hasn't fully broken yet. And in effect, this channel broke. We don't know whether or not we're just going to fall into the abyss, which would be this, right? And I've said it, from a technical perspective, I've said that if we break the 2180, 2170 level, all of a sudden, there's like, whoa, 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 what happened here? Are we going to go back to the 2000 level on the SPX? I doubt it, for different reasons. I want to explain something very important. And tonight is about talking about some of the realities of really what happens in markets, okay? The reality is what happens in market is not about fundamentals. It's not about whether you think, like I always kid around with Jasko, we have some very intellectual discussions, and I appreciate that. Whether Tesla is overvalued, whether Amazon is overvalued, whether, the markets are, and this and that. It's about how the money is managed in the high rises and the tops of the skyscrapers, or the second, third floors of a hedge fund in Connecticut, in Greenwich, or in Dubai, or in Hong Kong, and how the mutual fund manager sitting here at Fidelity and at Putnam Investments, my first real job when I started out, and what they think about it. Things don't just because they have a basis for things, they should drop here, and the PE is too high, and the price and what the reality matters with fast-growing companies is not PE, it's actually PEG. It's price earnings growth ratios. So anyway, and whether these people who manage the billions and billions of dollars for mom and pop, for pension funds, for institutional funds, if they feel that it's all over. The system is always rigged. Life is rigged. And I'm not getting philosophical, I'm just telling you the fact. If we woke up one morning and we thought about all the difficulties that we face in life, and I don't think any of us sitting here are born out of billionaire families, or, or just raining money, that type of stuff, right? We all work. We all work for a living. I do. And, you know, and the fact is that it's not, that all of a sudden these fund managers and pension fund managers and hedge funds are more like wolves, right? I want you guys to understand that. Hedge funds are like wolves. They'll go in and out. They'll day trade Allergan one day up 4, down 4. They'll day trade Google for up 14 and down 14 one day and stuff like that. And people are always looking around for reasons. Oh my God, why is that stock down? Why is that down? Well, sometimes it's just down because they're day trading the stocks hard. They see the flow down, they'll hammer it. They keep on shorting it, keep on shorting it. And all of a sudden, you see these, and all of a sudden you wake up one morning and the thing's up like $10 and you're like, oh, I'll say shit, right? As in like a bed sheet, okay? They're like, wow, I should have bought it there. So what I try to do with full integrity and discipline is try to show all these tactical levels in the market that one can possibly use as inflection levels to trade what happens on the outside. So you can pick those levels and try to make some money off that and do what. Look, I'll be honest. I understand a lot about international politics. I understand a lot about global finance and what's happening with the Fed and this and that. But at the same time, I cannot sit here and make some sort of very, very, that's the key word, very long-term forecast. I don't think anyone can. Because if we were making long-term forecasts, let's imagine that this webinar was being held in the 1930s, in the heart of the Great Depression, right? 1929 plus, which lasted like 36, like 6-7 years. Would you think that we would be here? I don't think so. So let's talk about something more recent. Let's talk about 2009. Let's talk about 2008. I was on Wall Street at that time. I left Wall Street in September, October of 2010, and worked for a hedge fund for about a year, and realized that, I just wanted to branch out on my own. Big risk, but hey, in life you take risks, called the Declaration of Independence. So the point is that I sometimes, rant about it and, talk about it in my forum on the chat room, that the credibility of the hardcore dogmatic bears is not something that I subscribe to. Do I subscribe to tactical corrections? Absolutely. I have shown repeatedly, as I'll show tonight, as this session continues, that we can fall hard. We can fall 1,000 points, 500 points. I've shown that before. In many cases, we've acted on it. But the reality of what we are in my opinion, given real economic substance, not just saying it at the whim of my head, we are in a pretty large-scale bull market. Now, that's one man's opinion. So I can't disagree with somebody who is bearish and thinks that that the markets will be down 50% by 2017, 2018. I'm sorry, I cannot subscribe to that. Because and this is something which might sound philosophical, but the history of human life and the history of world economies has been a bullish event, and it is a fact. If you take 6 months off and you travel around the world, okay, and you travel around the world and you see what's happening out there, it is not a game of misery and despair. It is people from Vietnam to Cambodia to Bangladesh to Pakistan to Hong Kong to Nepal to, Myanmar, which used to be called Burma, um, all striving to do something. They're out there, selling you things. Go to Bangkok. Don't hang around those red light districts too much, okay? Let Anthony Bourdain do all that stuff. But, you know, um, just go see what's happening around the world. It is a completely entrepreneurial, capitalistic, I want to make money regardless of anything. It's raw capitalism, just the way we were back in the early 1900s and the late 1800s. Read American history, which most Americans don't even know. Raw capitalism. The West was one. California is the sixth or seventh, not the eighth it used to be, but sixth or seventh largest economy in the world. It was built out of raw passion. Cowboys, entrepreneurs. People went out there. Texas. That was primarily oil, still is. Head west, young man, right? So I have a difficult time, and I'm dogmatically bullish when it comes to life, when it comes to the United States of America. I truly, truly am. Somebody once said that we are the ultimate nation in the world, people in the world who basically do everything wrong till it really goes wrong, then we do it right. And if you think about it, that has been the history of the United States of America. And we do drag the world. People say, oh, the U.S. dollar is no... I remember 2 years ago, they said the U.S. dollar is not going to be a currency anymore. It's going to be the Chinese yuan and blah, 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 blah. And I remember making a comment, I believe it was on Stock Twits, and even on my service, which is relatively young. We started on April 15, 2014, a little bit more than 2 years ago, unlike many other services that have been around for ages. That's okay. I said, that's garbage. If you travel the world, which I have extensively and experienced it, people love who we are. The US dollar is king. It's king dollar. And and that's it. So yes, we have our problems and we have this and that. We have a massive deficit and the Fed is always wrong, all kinds of stuff. And I don't want to get into that sort of economic sort of analysis of why the Fed might not be as wrong as, from what they did and this and that. But the reality is that because I always used to mention that to my clients, institutional clients as well as high retail net worth clients back in the days, in the late 90s till the mid 2000s, that we live in a fishbowl. So what we do is we always judge everything that happens in our financial markets and the U.S. economy in general through the eyes of a little cute fish. Imagine a goldfish. Let's say Fairway's a goldfish, okay, looking out of the bowl. Oh my God! There's a big cat looking at me. There's a noise out there. The door's opening, or whatever. It's scary. We have to start looking at the U.S. financial markets and what's going on, especially with the dawn, in my opinion, of not. I shouldn't sound so, from a hubris standpoint, like oh my God, Trump is in, everything's gonna be great. But we are entering a new dawn of growth. No question about it. The world feels it. The markets are showing it. And yes, there'll be lapses, but I think it is. Because the new administration coming in is inheriting an economy which whether people like it or not is quite strong. Look at the employment numbers. I don't care if they fudge them or not, but look at the employment numbers. Look at the unemployment, the jobless claims. The overall economic situation compared to what it was back in 2008, 2009 is far better. U.S. banks are in are in pretty solid footing. Yes, there's a lot of little funny stuff that goes on here and there, like we saw with Wells Fargo and everything. But look at the capital ratios of U.S. banks. They can withstand a lot of shocks. Wasn't the case back in the mid-2000s. Watch the movie The Big Short, which I think was a brilliant film that I saw once quickly, and then I saw again the other day on the weekend. Early in the morning I woke up and I just saw it. Like, wow. It is not. Things have changed. The problem with traders and investors, and a lot of people, all of you included, think that there always have to be some perfect scenario. There is no perfect scenario about trading and markets. We're going to get into it. There are imperfect scenarios that you have to basically navigate and do things right. Everyone says, oh, well, if they did this and did that, these markets are so overvalued and, blah, blah, blah. Well, new technologies and disruptive technologies that's happening, especially in the high-tech world, especially in the biotech world, are always disruptive. You can't put a real handle on them because they're not 1 + 1 = 2. They're not 1 + 1 = 2. So if you're looking for these perfect scenarios of like, it should exactly be like that so we can, garbage, because life isn't like that. But traders and investors, because of their own cognitive biases, which in simple, raw English means their opinions, their feelings about life, are, that's how they think. Now, there is nothing wrong with thinking that a certain company or a stock can lose 50% of its value, or that, we're going to have a big plunge in the markets at some point. But to keep on constantly believing in that, and listen to this very carefully, because sitting here at 7:35, 7:40, whatever, 7:35 in the evening, and I'm enjoying this, so don't take me the wrong way, okay? Listen to this very carefully. You keep on thinking that the world's going to end, that this whole thing is just nothing but a house of cards, okay, is not going to get you anywhere. Is not going to get you anywhere. It's not just that since 2009, when the S&P 500 was 666. I don't know if you guys know that. The devil's number. The S&P 500 back in 2009, and I've shown those charts before, okay? You got to go back, way back, okay? Right down here was around 666. There you go. See that? Does everyone see that? Does everyone see that? Yes, no, maybe, yes, right there, right? It's the end of the world. Okay, good. Just, because these are reference points. Believe me, 666, the devil's number, like, oh my God, it's over. The United States is finished. Guys, I've said this before, I'll say it again. Because I love, one of the dearest things that I love is my son and my family. My pets, and then my friends, and then you guys. I got almost blown out on September 11th. Okay? Seems like so long ago. What was it? 2001. I lost friends. If that cannot destroy the U.S. financial markets, I don't know what can. What's going to destroy it? That all of a sudden, the trillions of dollars in debt that we have accumulated on paper is just going to be just called in by whom? Imagine this for a minute. You yourself are borrowing from yourself, and you have the ability to control your payments. So at some point, if you go completely nuts, maybe maybe you will call in your own payments, and all of a sudden you're going to collapse. But think about how absurd it is. A lot of our debt used to be held by the Chinese. They've reduced a significant portion of it. Does anyone know who our biggest creditor is? What country? Somebody please mute the microphone because I hear a voice in the back. Can somebody tell me who our biggest, we are a debtor nation. Yes, of course. Federal Reserve holds a lot of our debt, but that's American. It's all right. It's not all right, but it's there. Who is the biggest debtor? Who is our biggest creditor?
Ourselves?
I
thought it switched to us. China's down.
It's not China.
China's, I'm looking at the latest stuff, sorry.
No, it's not China. China's down. Used to be Japan at one point.
China and Japan are close.
I know. So who is our biggest creditor?
I think it is U.S. itself.
Aside from us.
And the space program. We're going back to the moon.
Aside from us, the United Kingdom, guys. Okay, they're our biggest creditor. And the fact is that when you look at the nations that we deal with, okay, and Japan is also a pretty big holder of U.S. Sovereign debt. None of them are going to turn against us. Now, if you live in a conspiracy theory world, like all of them, all of a sudden, they're just going to be like, I hate you, I hate you. Trump said some very harsh stuff about China. Said some stuff about Japan. You think he doesn't know? He's going to cut the sweetest deal with China, and we have to be tough on China, and we have been. If you guys follow what's really happening with steel tariffs and stuff, we have put tariffs on steel, on Chinese dumping steel here, which has been a major sore point for years now. The system is not changing. The world is not going to become all of a sudden we are an island on our own and we don't trade with anyone and we hate everyone. No, it doesn't work like that. What I'm so impressed about, and believe me, I know more about Mr. Donald Trump and his CFO, whose number I probably still have in my old BlackBerry from back in the days when they were soliciting money for the Atlantic City casinos, which my big clients, lost 90% of their value. I mentioned that before. Okay? What I'm really impressed about is how he's addressing the whole and his cabinet, addressing his cabinet, who is picking what he's doing. Yes, we're not going to agree with a lot of things. I understand that. But this is something my wife said a long time ago, way before the media and everyone picked up. It ain't what he does, but it's the way he's going to act. After all, he's still a New Yorker. New York is the most diverse nation in the world. Okay? There are 165 nationalities that make New York work. People forget, but during 9/11, more than 20% of the nationalities killed and blown out of the skies, okay, of the buildings, burnt, jumped off the windows, were foreigners. I mean, foreign-born nationals, many of them U.S. citizens. So it's not about this white ultra-nationalist movement and the stuff that we hear about. Yes, there's a segment of that. There's no question about it. And I know more about it than anyone else. Believe me, I'll tell you. Okay? I knew about the alt-right well before you guys even knew what the hell it meant. You thought it was maybe a key on your computer keyboard, Alt, Control, Delete. Okay? That's always there. But I am very impressed with the practicality and the economic sensibility of what is happening, the people he's nominating. So, beyond the political stuff, that's a big plus, by the way. That's a very, very, very big plus. And many of you might not understand it, but you will see it. Because the reality is, if the U.S. economy becomes a closed nation, right, and we start to go really nutty on our trading partners, who are our biggest trading partners? Can somebody tell me? Just take a guess. How about
China.
the top 3 trading partners? Who's the number 1 who think? Let's see who knows this.
Canada, Mexico.
Who said Canada?
Ryan.
Right, you're right, dude. Okay. Yeah, you're right. Canada, Mexico, and of course, China's
China,
next.
Japan.
But Canada's number 1. Canada's number 1. I don't even know why we don't like conquer and nationalize Canada. Seriously, it should be our like 53rd territory or something like that. They're nice. They're nice people, great food, beautiful scenery. My brother-in-law's Canadian. My sister-in-law, my wife's younger sister, is married to a Canadian. Great people. Really annoying at times, especially when you make a joke about Canada. A long time ago, I made a joke like, "Oh, Canada had a population explosion," because what's their population like? I'm just taking it off the top of my head. I think 20 million or something. And I said, "Oh, wow, you guys had a population explosion. Like you guys had like 5 more babies, And he got all pissed off. You joke around hockey and you joke about their thing, and they get all mad. But they're good people, really good people. So we should take them over. Instead of invading Iraq, we should just have a friendly invasion of Canada by simply saying, okay, all hockey tickets are free, free beer, and can we just take you guys over? Seriously. Mexico would be a big problem because there's a lot of wild people out there, so different story. Okay, all kidding aside, the fact is that, yes, Canada. And then we have, this is a good chart. I'm going to talk about this in a second. So that's right. So I like the way this economic movement is going on, like as in the new administration coming in. Look, hardcore talk and extreme fanaticism on both sides. I've always said extreme fanaticism on a religious basis, doesn't matter what religion it is, okay? And extreme fanaticism on the political side serves no purpose. It serves a purpose. It serves a purpose in getting votes, and that's fine. You got to do whatever it takes to get votes. And that to me is A-okay. Some people say, oh, he's weird, he's saying that. Yeah, it's true. But then when you get into power, you got to moderate your views. You got to be practical. You got to do what needs to be done. Trump today said that he was going to make sure that no U.S. company leaves U.S. borders, right? That they were going to be completely punished. I thought about it later in the day. That's a pretty hardcore statement. Why do you think, and I correlated this, because, I keep on thinking, and then I shared that with you guys. Part of the reason why, why the biotechs were down? What happened when Clinton and the Obama administration decided that, made some very strong statements about no cross-border mergers and tax evasions? You guys remember that? Anyone remember that, like a few months ago? Jasco? I know Jasco knows.
The when they made the comment?
Remember when Clinton was hitting the biotechs, and the Clinton administration was basically,
Yeah.
I'm sorry, not Clinton, Obama basically said, the Justice Department said that these cross-border mergers and tax evasions, they called like somebody was trying to buy somebody, I forget the names, all these big pharmaceutical companies, you know, that, oh, you can't have cross-border mergers. If you're based in Ireland, we're going to tax you hard. All that happened, right? These are dangerous talk. You might be a nationalist and say, oh, no U.S. companies can basically have overseas operations. Halliburton moved there. Does anyone know what Halliburton did 2 years ago? Halliburton, one of the largest oil service companies in the world. What did they do a couple of years ago? Because of excessive taxation by U.S., you know, we have the highest corporate tax in the world.
And they moved to the Middle East?
Yes. Who said that?
But they went to Dubai or something, I think. I forget where they went.
Yeah, that's exactly right. Who's that? Who are you?
Jessica.
Yeah, you're absolutely right. They moved their corporate headquarters to Dubai. Now, some people say, wow, they're moving overseas. Does anyone know why Delaware is famous for, aside from the nice views and, you know, natural breweries and taking a drive out there? It's only about an hour away from here. What is Delaware famous for? What is Delaware as a state?
Tax haven.
It's the biggest tax haven in the frigging world. We keep on screaming about the Swiss banking system and Cayman Islands and Bermuda and what's it called? The Isle of Jersey, you know, off the coast of England. Like, you know, that's where all the corporations are registering. If anyone has an LLC, you know, you might want to register in Delaware. Secretive. Even the U.S. government cannot get records out of Delaware corporations. Go Google. Most of the U.S. corporations are based in Delaware. Maybe it's just in Cayman Islands or Delaware. It's just a mailbox. So why can U.S. corporations have, you know, move their overseas operations? When people think, they're like, oh my God, you know, overseas operations, they're going to take lock, stock, and barrel, everything from the toilet paper to the water cooler, you know, out to Dubai. No, it's just that they're registered there, so they don't get heavily penalized for doing work. So right now we have Delaware. We've had Delaware for a bit. In fact, the other state, which is huge, I forget, is Idaho or somewhere, because it's a very lucrative business. They pay a very fat fee. They pay a very fat fee to incorporate there. So bottom line is, and this is the bigger picture, you know, and then we're going to get into some stuff, is the fact that you can't talk like that. You can't say that somebody can move certain jobs here and there and they're going to be heavily, heavily penalized. You have to give incentives why they should stay here. Corporations. America was built on business, whether you like it or not. It wasn't built on, oh, I'm just going to, you know, does anyone know, like, the biggest, you know, read history of the U.S. back in the 1900s. We were the biggest, rawest capitalists, which the Chinese have taken over the mantle. The J.P. Morgans, the Rockefellers, the Vanderbilts. That's how the U.S. was built. That's capitalism. It's not nice. It's pretty ugly. But do you want that? Or do you want to be a socialist economy where it says every worker should have their rights? Of course they should have their rights. That's why they're the labor unions, and they're still very powerful. But you can't be like, you can't do this, you can't do that, because the government's going to come in. In that case, we're a socialist country. What Trump said today, in his own way, that's pure communism. Oh, you can't do that because we will never let it happen. Like, what the hell? You're telling me as an independent corporation that I cannot maximize my profits for my shareholders? The government's going to step in? Whoa. Remember Russia back in the old days? Exactly. Think about it for a minute. But he's not going to do that. The Indiana Carrier air conditioning plant, it was great news. 1,200 jobs saved. Fantastic. They gave them a lot of juicy perks. And that's the way it should be. We need to give our corporations juicy perks as to why they should stay in the U.S. But you can't force them. Everyone says, oh, yeah, bring all the jobs back here. Great. In that case, you know, you go to Walmart. Do you ever buy sleepwear in Walmart? I don't know where you, I mean, don't take me the wrong way, you know, but guys, you know, where do you buy your underwear? I don't know. Walmart, TJ Maxx, or maybe some of you big shots, you know, maybe buy it at Ralph Lauren. Okay. You want to pay up like $50 for it, like a sleeping pajama? Feel free to do so. Because economics says it's a downstream thing. You go where the cheapest labor costs are. But in between, you have to make some adjustments so that it doesn't, you know, you're not constantly taking away jobs. Globalization is not something you can reverse. In that case, we should just cut ourselves off from the world. The market will drop 10,000 points. The hardcore dogmatic bears will be dead right. Gold will go up to 10,000. And we'll all be happy. As long as you're on the right side of the trade, right? That's the big short. Except there won't be anybody on the other side to pay you when you want to cash in your options or your stock, because the economy will fully collapse. That's the reality of life. But what I like about the new administration coming in, they're realists. Look at Mnuchin. He sounds like a new name for a donut or something at Krispy Kreme. Mnuchin, very smart guy. His father was a big shot at Goldman Sachs. Goldman Sachs, right? The bad guys. Look at Wilbur Ross, Commerce Secretary. They're all practical pragmatists. They know what's happening in the world. You cannot change the view, you cannot change the flow of time. You cannot change the flow of how the world is progressing and changing. You cannot turn back the time. I don't care what your views are. I don't care what you are. Okay? You just can't do that. It won't happen because life happens. And what was that old saying? Life happens, yes. Life happens in between all our big plans and just life happens in between all our big plans. There are people say, oh, I'm not going to get married till I'm this and that because I can't have a kid because I don't have this much money. And guess what happens? They don't get married. And when they do get married, they can't have kids. You just have to let it go. It's the same thing with markets. You have to let the forces that it is to go. So saying all that, I'm going to talk a little bit about trade management. It's very, very difficult to talk about trade management because it is difficult. It is difficult for me. It is difficult for many people. It's difficult for anyone. But one thing I know is that you always have to take risk. And I cannot explain in one session, and I'm sorry for that, okay? I apologize for that, but there's no way that anyone can talk about, you know, everyone is different. We're all cut from a different cloth. I'm not talking about races, nationalities, and thought process. I'm talking mentally. Some of us are very aggressive, risky. They feel that, okay, grab the ball, run with it. There are no perfect moments. That's it, you know. This is guerrilla warfare. Just go grab it. Then you have the ones in the middle, which are not sure if they are real, you know, sort of combat material or whether they are investors. And then you have the conservative type. Let me just make one thing very, very clear about my service. And I think I mentioned this before too, is this is not a grandpa's like, I'm going to sit back and buy something and maybe it works in 3 months, maybe it works in 6 months. I'll just won't look at it. No, it's not. We are primarily a trading service. Swing, day trades, tactical trades, long, short. And that's what we are. What's the bottom common denominator of, and can somebody tell me what the common denominator and the baseline for the Clueless trading services? Is it a conservative, like, okay, yawn, buy something, put it there, or is it about risk? It's a question.
Risk.
Absolutely. I will never shy away from that. I've always been straightforward with everyone. It's about risk. We are, and we are a trading service that's not looking necessarily for like 30-cent moves. There are services out there, and believe me, I know a lot of them. Oh, you just made 40 cents on that stock. Okay, time to get out, blah, blah, blah. I never do that. Our biggest money has been made on short-term swing trades and intraday big volatility trades. No question about it. So anybody who comes into the service thinking that they are going to basically be just sort of some sort of like, oh, I'm going to buy this and then it's going to work out in 5 months. Well, no. But then at the same time, I welcome everybody because everyone has to have a diverse viewpoint. Using my tactical charts, which are in many cases pretty nice intermediate to long term and have been so right, you can play that game. You don't need to trade every day. I have traders who have been with me from day one, which was April 15th of 2014, who trade maybe 1 or 2 times a week. Without naming names, they're doing quite well. Doesn't mean that it's going to be like an easy ride, but they're not forced to trade every day. Look, this is my living. I got loans to pay back. I got bills to pay for college, big time. And I got a reasonably good living standard, a nice one, okay? And I'm not a big like, oh, I'm going to Atlantic City or Vegas to blow like, a couple of like $10,000, $50,000 on a table. I'm not like that. My gambling is reserved for my screens because I can quantify them. So the point is that I have to do it every day. So just want to make that very clear. So saying all that, when it comes to risk management is really a mental game of how you do it. There is no exact method. Our good friend who is not here right now, I believe. Oh, Corey just walked in. Okay. Sometimes ask me terrific questions. Well, exactly, what do you think is going to happen? And other people ask me too. Honestly, I have no frigging clue. Do you think anyone does? All I know is that within a framework of things, I can make some sort of intelligent, half intelligent assumption based on my charts, which have been overall very accurate, that this might happen. It's a game of probabilities. Like I've said before, and I'll say it again, it is not a game of certainties. The problem is with all of us, that includes me at times, but I try to sort of moderate that because I constantly fight with myself to keep not negative thoughts out of the picture. Negative thoughts, people say, oh, are really bad. No, they're not. Negative thoughts are actually overall good because they allow you to think what is wrong with you. I know what's wrong with me. So at least I'm 10 steps forward than many people and members and traders, and this is behavioral game theory, who don't even want to acknowledge what's wrong with them. I know what my faults are. I fight it every single day. So saying all that is all of you have to somehow come to the realization that you can always, and I'm committed to that, that is sort of religion to me, okay? That whatever happens, whether it's an Amazon trade that we're getting hit on and over the short term, you have to be completely brainwashed to the fact that on a tactical level, when you catch those tactical bottoms, which are rolling, which are not like going to be like a perfect, like, oh my God, this is exactly where I bought it. It's only going to go up from here. No, 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 no. On a tactical bottom, this is a weekly chart of Amazon. And I don't know exactly where the tactical bottom is, but I know it's close. I know it's close. Internals. Still gonna go a little bit lower. Can it go to 724 lower Bollinger? Possible. I think Corey mentioned that. Is it possible that this, let me move all the lines here. Is it possible that we hold support at this particular Bollinger right here, this magenta line, somewhere around 736, and that if it does go to the lower Bollinger at 725, that it happens within seconds and then it turns? But I know that looking at the daily, a stock that is revered and loved, and more importantly, I don't care about loving Amazon. I don't love Amazon because we get most of our stuff from Amazon. I don't like my credit card bills when I see it like Amazon, Amazon, Amazon. I don't even care. Honestly, I don't love any stock. It's just a matter of looking at it, as an asset, something you can use. Be a user. Okay? People say, oh, I love this stock. So love for what? Do you think I love Alta? It's up like $13, $14, $15 after hours. My wife's not like one of those like, oh my God, I got to go to Alta and this and that and just spend like $900. No, no, no. Thank God we're not like that. But is it a place that most women go to try out things and buy their makeup and stuff? Yes, absolutely. Between Ulta and Sephora, that's where they spend their money, right? Does anyone know who owns Sephora? There was something I read like about 6 months ago. I was just like, wow. Who owns Sephora, the high-end cosmetics company for women? It's a little trivia.
Penny?
Does JCPenney own Sephora?
Just guessing.
Huh?
Just guessing.
It does, right?
I think so.
Because I read a few months ago, I'm Googling it right now, and that
Yeah, they have them in
totally
their stores,
totally
don't they?
blew me away. Who owned
It's a Louis Vuitton.
thank you very much. LVMH.
Christian Dior, yeah.
Louis
Yeah.
Vuitton Moet Hennessy. No one even knows what LVMH means, right? Well, I'm sure some of you do. Louis Vuitton Moet Hennessy. All I knew Moet Hennessy was like great champagne. And Louis Vuitton, you go try on a pair of shoes, you leave your right leg there, right? But unless you buy it on sale. Yes, you're right. LVMH owns Sephora. In fact, it's their biggest, most profitable division of Louis Vuitton. Okay? So JCPenney has the stores inside their stores. That's why you mentioned that. So all I'm saying is, trivia is out of the picture. So all I'm saying is like companies like Ulta, companies like Amazon don't go out of favor. I'm sorry, they don't. Eventually, they might lose their, eventually they might become like a boring state company and they lose value and stuff, but not now. And so the point is, like, I'm looking from a tactical standpoint. Here's a daily version of Amazon. We're all like, oh my God, where's the bottom? When is this stock going to, go up like 15, 20, 30 bucks? Except that most people weren't buying it at that 715, 720 level when I alerted it. And I'm no genius. I just basically saw the reversal candle. I said, guys, get into it. And we had 1, 2, 3, 4, 5, 6. 6 days. 6 days. The stock went from literally 700 to 800. 6 days. And I put out my alerts on what you should buy. And I staggered some of my winnings. And I did not hold it all the way up, but close to it. Imagine if I'd held the whole position that I bought here. But I know some people who did. They texted me. They were up 2,000%. $6 calls that they bought, they sold at 85 plus or more. And they were like, thank you, thank you, thank you. I'm like, shut the thank yous, man. I wish I was back in my Wall Street days. I'd be like, okay, where's my 5% commission on that $150,000 gain or $200,000 gain? So I've shown a lot of these guys on Priceline, on Amazon, and this and that. So I don't want to be dogmatic about what might happen 5 years from now, 3 years from now, because you know what? I don't have the luxury of doing that. I'm not a fund manager. I'm a big picture guy when I look at things, because that's what I normally am. You have a nice drink with me, talk about like life and economies. I'm like, okay, this is where I think it's going. But when it comes to like actual making money, like who the care happens what's going to happen in 2 years' time? Yes, somebody can, of course, short the stock and sit on there. Jasko's my good friend, like he mentioned, and he would be right probably. But I don't look at it like that, because I know one thing. Within the next 6 months, and listen, and you can take it for whatever it's worth. Within the next 6 months, and it's called financial engineering. Somebody say, oh, it's terrible, financial engineering. Well, who gives a flying what? They'll split the stock. Imagine if Amazon came out tomorrow and said, oh, we're splitting the stock 5-1, 10-1. All of a sudden, it's a $74 stock. The stock will jump $50 in 1 second. I've seen it happen before. And that brings me to another point. A lot of the times, I talk about things and this and that, and people are like, well, that can't happen, this and that. And there's nothing wrong with it. There's an old saying in the business, thank me after the trade is done. That's the biggest compliment. And hopefully you were in it. People say that can happen. The only reason I say that things can happen is not because of my feelings or my thoughts and this and that. It is because I've seen it happen. And that's something that just is something that you guys, some of you might or might not. It's pure experience. I've seen the weirdest things happen. And don't take me the wrong way when I say it. It's called financial pornography. I have seen the craziest things happen. Can somebody tell me what was the craziest trade that was done within the past 30 days or less? Which was the biggest and the wildest, craziest trade that I said buy, and it went berserk?
Dries.
Dries, exactly. Now the only reason, exactly, and that stupid stock can do it again, except maybe not to that level. And I'm telling you right now, Dry Ships was a stock that I traded years ago. It was one of the hottest sectors, which is the Baltic Shipping Index. Some of you might know, some of you might not. Baltic Shipping Index rates are set overnight and weekly. Okay? And then when the recession and when the Great Depression, I mean, there was almost like a Great Depression. I mean, the modern happened in 2008, 2009, the stocks collapsed because those are based on simple. What's the price of copper? What's the price of iron? What's the price of zinc? All the metals that go into like real building. So if we're going to carry it, You're going to give us the percentage of those actual spot prices of copper, iron ore, silver, I mean not silver, iron ore and copper primarily is your shipping rates. Everyone understand that? So when copper went crazy a couple of weeks ago, dry ships went crazy. Stock went from 15 to 104. So let's not talk about the fundamental. Let's talk about as a typical, let me act like your atypical investment newsletter, investment service. I just gave the biggest trade known to man to my subscribers. What more could they ask for? Now, whether they bought 100 shares, whether they bought 50, whether they bought 1,000 shares, it's not my business. I gave the trade. So that applies to a lot of things that happen in my service. But because I do kind of like interact with all of you, sometimes I make excuses. Sometimes I'm like, oh, well, this and that. Time for all that is out. I'll put the trades out there, guys, ladies and gentlemen, okay? You do what you need to do with it. Because a trade given at $15, $16, $17, thanks to mtrader22, who is somebody that I know personally. And then I look at the chart, I'm like, okay, it looks good. Remember, I will never recommend a trade if I didn't feel it had the potential to make money for my people, period. And so when she mentioned that, take a look at it. It was already up from 4 to 16, and I said, go ahead and do it. I mean, I said, go ahead and let's do it, because the stock was at 5 or so. Because this is what happened right there. Okay, it's like a bell curve. So it was already up. It was already up, and I said, you know what? I looked at the chart. I'm like, this thing's going. This was not a technical trade. It was gut feeling, momentum, which brings me to a very important point. You have to respect momentum. When a stock is taking off on heavy momentum, I've shown a bunch of them, okay? You got to run with it. 3-candle move, always. 3-candle move. This was one from back months ago, a company called Resolute Energy. Now, somebody might say, how the hell do you know about this company? Well, I use a lot of different resources. I pay for a lot of services, okay, that are feeding the information like, okay, this talks to the move, this all that is part of the meager 60 or 80 bucks that you pay me, because I'm paying for all that stuff. So I see something, I'm like, okay, let me take a look at it. It's out there. And a lot of the other ideas are completely mine. So here was a stock that was recommended at around $7 or so. You can go find, it's all posted, alerted. The stock went to 35. Today was the first day it actually pulled back. But even on the first run, it went to 20. REN. So there's a lot of these spec plays that I put out there that go berserk. Of course, it's an energy company, so it kept on going. Except here, everyone thought the company was out of business. Around 7, I remember we bought around 7 and 9. So when somebody says to me, oh, I can't really do day trades, I said, how about a bunch of the swing trades that I put out there? Okay, so let's get back into the markets right now, because, you know, I've spoken a bit on things. So here's a key summary of what I talked about. You have to be flexible. You have to somehow manage your trade positions. If you have it, let's say you have $10,000 that I'm just taking, you know, base amount. Let's say you have $5,000 or $10,000 you want to play in options. Remember, it's a risky business. So you don't want to put your real money in there, right? Period. and you want to take all of that 5,000 and put it into Amazon, well, you're a goddamn idiot. You put a little bit into blue at $1, $2. Options go to 5 to 7. You put a little bit of that in Bank of America. Let's say you put $500 in Bank of America. Okay? And you could have taken close to $4,000 out. You got to somehow split your risk. You won't have all pile into one single thing and they're like, oh my God, I'm over, oh, I'm canceling subscription. Feel free to do so because I really don't care. I'd like to know all of you guys like for years, but hey, you come and go, it happens. But when it comes to trade management, you have to take some bets. If you don't take some bets or risks, you will never make the real money. So let's take a position on Alta. Alta options deep in the money. It's called safety. Costs roughly about $1,400. So let's say somebody has a reasonable account and they can spare $1,400. And they say, okay, I'm buying deep in the money, so my worst case scenario is I'll lose $700 because the stock will be down $10, whatever. Except it goes the other way. You have to play the earnings plays. Small, moderate amounts. Alta options are super expensive, just like Priceline options. But what about the cheaper ones? What about Bank of America at 14 cents that I alerted? 14 cents. So you could tell yourself, and again, I'm not going to tell you what you want to do or not do. So you could have bought 100 calls, 100. Very few people buy 100 calls. You could have bought 100 calls at $1,400 or maybe 50 calls at 14 cents. That's $700. You think $700 might put you on the street? If that's the case, you better apply to the, for welfare and not ever be a trader. Honestly. So $700 would be close through $700 that you would have put into, let's say, you would have yourself roughly like 50 options, right? And then you would sell them today at 90 cents. It'd be $4,500. Now I know many of you will say, oh my God, oh, I should have done that, could have. Point is, no one's saying you have to hold it all the way, but what if you just doubled it? I show enough of these trades. I showed Goldman Sachs way back. It said the stock's going to go to 210. It went way past that. Do I think the stock's overvalued? I have no frigging clue. Goldman can go to $250. Remember, during the campaign, they made it sound like Goldman was like the worst people in the world, this and that. Lloyd Blankfein, the Goldman Sachs CEO, was supporting Clinton. That's America. It doesn't matter. Gary Cohn, who's the second in command at Goldman Sachs, might join the Trump administration. And good old Donald is going to pick him. Mnuchin comes from Goldman Sachs. Drain the swamp, my butt. It's A-okay because you got to hire people who care and who know how the system works. And Goldman knows that real well. This is a chart that I had drawn way back. That's why it's all the lines and stuff are put in there. Holy, whatever you want to call it. Busting loose. Somebody says, oh my God, this is going to crash and burn and the Dow is going to be at 16,000. Ain't going to happen, guys. Not this soon. Unless Mr. Donald Trump does something really stupid, which I don't think he's going to do, and then the whole market's going to collapse. The most you'll see is a test of this breakout line, which is 218, and they'll be like, oh my God, it's all over. Because this is an exact depiction of what is really happening. When the big boys like Goldman are moving like this, ladies and gentlemen, do not sit there and think the world is over. The market's going to go a lot higher than me and you think. But again, here's a trade that was given. This line was drawn. I said, if this crosses over this, this is what it's going to do. Did I expect this type of move? No. I thought like 200, 210. I lost the last, I missed the last 10, 15 points of this move. That's okay. There were calls here which were recommended, okay, more like around here, which were recommended at around $1.60. Can anyone tell me where they are right now? Just take a guess. Just take a guess. No one?
75.
I think Exeter's right because I haven't checked it. Something like $40. Guys, I want to say something. So I'm going to do the math here for you on my $5 little calculator from Walmart, okay? That I've been using for God knows how many years. Get ready for this. $1.60 minus $40 is a $38 gain. Divided by $1.60, you're talking about almost 3,000, 2,500% plus more. It's huge money. It's huge money. So this is something that bothers me about myself too, by the way. I'm sharing this with all of you. We could make fortunes on what we do. And the best part is I'm already delivering the alerts and what needs to be done. It is up to you guys and also up to me, but this concerns you all. This session is not for me. This is for you all. How you manage it, how you can hold your head high and say, I'm going to follow through. There was a guy who took $500, $600 and made $75,000. It's in a testimonial. This was way back. Like way back meaning like 2 years ago, not that long ago. There's a bunch of people like that. There's a guy in here that you all know, I won't even say the name, who has taken $10,000 and made it into $70,000 or $60,000 in the last 5 months by trading my alerts. Has he not had losses? Of course he has. But then he steps up and he does it. He doesn't put everything in one pile. I have great stories of real, these are not stories, this is a reality. What I'm saying is that trades like this are once, not in a decade, once every like a year. But all of us, including myself included, are not taking it to full advantage. It's like somebody's giving you these massive gold coins on a gold platter and saying, you know what, go do it. And you're like, no, thank you. I'll just take one. We are all being idiotic about what's going on. I'm serious. And I'm not wildly bullish. I'm just saying, just overall. Look at a boring stock like U.S. Steel that I wasn't even putting money in. And then right after the elections, I came in and I said, guys, we got to buy the stock, right around here on the 9th. Like somewhere around 20. Stock's at 35. U.S. Steel calls are not Priceline where you have to get a second mortgage to buy one call. These are 30, 40 cent calls. They're at 5, 6, 7, 8, $9. Guys, we all need to wake up. Can't be sitting around there saying, oh, maybe, could have, should have. Once you get into a trade, and every trade is different. Every stock is different. But once you get into some of these big, large sort of, Bank of America type of trades, which is up a goddamn 1,000%. It is. Can anyone remember? Well, I know Brian will remember. The alert was put at what price on the 21 calls expiring this Friday?
14 cents.
Thank you. Where did they go to?
They were up at 70 cents at some point today. I'm not sure what they're at now.
Yes. Where did you sell it?
61.
Roughly. Okay.
61 cents.
The reason why you don't know where they went to, because after you sold it, you didn't take a look at it. They went to almost $1. Okay? So,
Right.
and it's not your fault. I mean, you got to be happy with what you made. I mean, that's fine. So 0.14, and they were 3 cents, by the way, the day before.
Yeah, I missed that.
Minus, I didn't alert it at 3 cents, though. I mean, I always said, keep on buying Bank of America. Oh, that reminds me of something really, really, really important. And please, that's for all of you, which are going to help you. When I put out my alerts, you don't have to follow me like a lemming, because I'll be taking staggering profits here and there. I'm managing my accounts depending on what the market's doing. But I'm putting enough information out there for you to do the same. So if you feel like my my charts on Bank of America are going to go to the $23 level or 22.36 as shown in the Fibonacci retracements that I posted a couple of times, well, you got to do what you need to do. You need to hold it. You don't always have to wait for my alerts. We're not a ditto trading service where you're going to mimic my book. In that case, you're going to take some losses you won't like. You don't want to do that. What you need to do is take that information, use it in your head. All of you are very smart, intelligent people, and do what you need to do. There are traders in here who basically go against what I'm saying and say, okay, you showed us this and that, and I'm going to basically short the market based on, and they're doing well. So it can't be always like, oh, are you holding? Because I'm rejuggling my portfolio to make sure that my P&L stays sober and where I can maximize my profits. You want a ditto trading service, I'm not a portfolio manager. And if I'm going to be a portfolio manager, then you got to pay me $10,000 a month to manage your portfolio. I left that a long time ago. I'm giving you valuable charts with levels, which reminds me, before I end this session, in the morning, end of the day, when I post those charts, those are not meant for pretty pictures. Those are meant to basically give you an idea where I think the markets are going to be the following day or what they might do. So please, for your own benefit, so you're not like, oh my God, what's going on? You know, that's what happens a lot of times, right? You are aware that that is what the market might do, and sometimes they are out of the parameters of what they're doing, in which case I'm always updating during the day. So what really pisses me off as a person, and this is for your own benefit, is when people don't really review the charts. It's very simple. Lines, arrows. I can't make it any more simpler. If I made it any more simpler, then some 9-year-old kid from Congo, I just picked a name, or Cameroon, okay, can trade the market. I can't make it any more simpler. Internals and stuff, different story. So two things. You got to review the charts. You got to have some screen where you're looking at your own charts, hopefully replicating, one of my platforms, and then figuring out. Because volatile market doesn't mean that they are going to do exactly what they do. But what really annoys me is when people are not looking at the charts and coming in with like, oh my God, why is this happening? These are very volatile markets. They're very difficult. But at the same time, enough opportunities to be made. So in summary, what this session is all about, okay, is the fact that, and this is the chart of JNUT, which I think is the most brilliant, low risk, high reward trade for swing traders only. Somebody's trying to basically dilly-dally, oh, why did it go up and then it came down? Well, don't even bother. Gold is close to a major technical bottom. And if you never, bought your significant other anything of gold, well, maybe it's time to do it. Because gold is pretty goddamn cheap. Technically as well as psychologically. So saying all that, it's a great trade. Got to hold it for a bit and keep on swinging it. So what I'm getting at is you have to not just look at the charts, because it sounds like this is almost like turning real kindergarten, but you got to understand a lot of the stuff that I teach. You want to basically be a stingy bum and not pay for the ACS and stuff and my time and all the costs associated with it. That's your problem, because I teach very, very detailed things which you can apply in difficult markets, and it works. Managing your trades only comes if you understand the technicalities of what's going on. If a 5-pack session is that difficult for you to manage and you keep on losing thousands of dollars, well, like I said, you deserve it. Because I myself have a difficult time in volatile markets trying to do the patterns and stuff, but then at least I know where I need to cut my losses, where I need to get in hard, and where I think the markets are about to turn, or individual stocks. So leave it to yourself to figure out what you want to do. Which reminds me, many of you on the paid ACS sessions, you're done with your 5-session things. So feel free to sign up. I'm a very generous guy. I'll always do these free sessions and stuff, but have some respect. And if you want to take advantage of my time and energy and not pay for them, that's up to you. And that's sort of the tough talk on the thing here, because I run my service as a business, but I don't really force it that much. Saying all that, a couple of things. So you have this chart of the Russell 2000. Just want to mention a couple of things as we get into Friday next week. It's going to be heavily volatile. There will be huge opportunities in individual stocks. You have to manage your trades one way or the other. You put in way too much into one thing, you're going to be fried. Amazon, in my opinion, which some people are very concerned with, is going to bounce hard, and it's going to bounce really hard. Does it mean it's going to make new highs? Absolutely not. And I don't care about it, because the stock, even if it drops to 730 or 720, and if it bounces 10, 15 bucks, you can literally, at that point, get real aggressive and make back all the money that you lost. Trade management is something that I also teach very extensively on my advanced coaching sessions, especially on the one-to-one sessions. The reality is you can lose a bunch, but you can make back quite a bit if you can catch the right wave. It doesn't always have to be in the long side, can be in the short side. Another point. I talked about earlier in the session about these big macro trades. I'm going to stay short for 2 years and stuff. For some people, that's totally fine. For people like us who have to pay the PSE&G bills, pay back the loans, blah, 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 we can't afford that. You want to be a fund manager? Run your own fund. There's nothing wrong with that. I entertain both long and short views and good solid discussion, which I want to talk about. Okay, mentioned on the chat room is welcomed. So on a trading floor, there are heated exchanges. That's the way it goes on trading floors, all right? So don't take it the wrong way. I have this great back and forth with Jasko and stuff. I love the guy. I think he's one of the smartest guys that I've known. And I mean that, and I give him a compliment. Okay? And we have talked privately, and we know. So don't take it like, oh my God, he's hitting Jasko and this and that. No. That's just the way it is. I hold no grudge, vendetta against anyone. I respect all of you for your views and stuff. I might not agree with them. That's just the way it is. Last point I'm going to say, very importantly, My service is not an establishment service. It is not like, don't take me, hopefully they don't sue me, T3 Live or some other service or this or that. We are not an establishment service. We are the outsiders. I think differently. I work differently. It works very well overall. And that's why you should all be members and tell your friends to be members. You want a typical establishment service? Go sign up with any of the other services, the same old stuff, blah, 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 blah. You want to think outside the box while the rest of them are thinking in a different way? We catch more bottoms than most of them ever thought of. On that note, I gotta go. See you guys tomorrow. Let's have a great week coming up. It's going to be very choppy. At the same time, do expect some big runs on individual stocks. We have to be quick on it. Leave cash on the side. Even if it's smaller accounts, leave cash on the side. Do not lump into any one position. Like, doesn't matter how much you love them, because love kills. Remember the first girlfriend or boyfriend that dumped you? Exactly. All right? The same thing with stocks. There's nothing to love about something, nothing to hate about something. These are U.S. companies primarily that we trade in. They all have integrity, in my opinion, and they are not doing real funky stuff. Do things get overvalued in a bubble? Absolutely. We are not in a bubble for one single reason. Can somebody tell me why? Just take a real guess and give me a straightforward answer why we are not in a full bubble. Anyone? Can anyone?
The valuations are still reasonable.
Bullshit. Excuse me. Sorry, Corey. I love you, man. Okay. No. I'll tell you why we're not in a bubble. Because I've been doing this, for a bunch of years, and I actually really haven't been doing it for 30 years, whatever. Started in Wall Street 1996, 1997, and really got into the money management part after my training and stuff right before the big bubble, the real big bubble, the tech bubble. I was a tech guy, picked up some stocks, wow, all of a sudden I was the top 5 guys, they all thought I was genius. The real bubble is behavioral. Nobody is making real big money. The bulls are talking the talk, not walking the walk. Look at all of us. Are we making millions every month, 2 months? Are you at a stage where you can say, oh my God, I'm making so much, I love it. That's a bubble. None of us are. I'm doing well. In my opinion, and I'll be very honest, I think I'm only at probably 60% of my potential of what I'm doing. And that's far ahead of most people. All of you included. Nobody can stand up and say, crap, I nailed it. We are all, you are acting on my alerts on bottoms and stuff, are all selling early. You are missing more on the upside than you're losing on the downside. I can show you every single instant. There is no euphoria. You think I'm just giving you a Trump speech? I am the non-establishment Trump. I'm telling you the truth. All these guys, I put on stock trees and people love it. I have God knows how many followers now. I think 26,000 reaching or 27,000. I don't even know. Okay. Why are they following me? Because of the few comments that I make. And one of the comments that I make is that, one of the comments that I make, which they love, is the fact that, I'm trying to find it. Okay. It's the fact that the bulls are scared. Look at you. I mean, I'm pretty bullish. I'm scared every morning that I wake up. The bears are terrified. and the market just keeps on going on. There is no euphoria. And the other comment that I make, which is the God honest truth, okay, is that most traders, a majority of them, I use the word, I use the term 90%, missed out the entire move in the market since, looking at the, let's say, for example, from down here, from November 9th. And they now are praying for a crash. A crash ain't gonna come. Tactical moves down? Absolutely. A small tactical move down from the highs here at 22.14 to here has put so much fear in the markets that it's like, oh my God, it's over. It's over. Like we say in New York, dude, it ain't over till it's over. It ain't over. Because everybody out there missed this, I would say, good portion of this move. Look at all of you. Did you buy the lows as heavily as I did? Yes, some of you did. What'd you do after that? Within 2 days, 3 days, boom, you're out. Whether it's US Steel, whether it's Caterpillar, whether it's this or that, you're out. Bank of America, you're out. Now you sit back and said, oh shit, excuse me, I should have held it. Oh man, the amount of money I could have made. Amazon at 710, 715, God, thing goes to frigging 800, and most people are piling in there at 780. That is why we are not at the top. And I am putting that down on paper. We are not at a major top. In the major tops in the market happens when people overall are super excited because they're making a lot of money. None of us are reaching our potential. And this is the first service, Clueless Trading, that you'll hear the person saying that. None of us are making, what we should be making. With my type of alerts, I should be making a frigging $1 million a month. I mean it. And I'm far from that. And some of you, forget about it. You're buying great entries, you're selling shitty exits. And then you're seeing it go. And now we have a minor correction, and it's just like, oh my God, it's all over. On that note, you know exactly what I'm talking about. Keep on spending some time and a few pennies on working with me direct, understanding what I put out there. Stop being like completely shit scared all the time. The P&L should not, it's very hard to see on bad days. I know that. I know that because I know it. I'm a trader. But then at the same time, 1 or 2 single trades can wipe that out the next morning. Workday. I gave that stock and I called it a short. The calls were, I don't know, like 70 cents or 80 cents. How many could you have bought? The frigging stock is down $13 after hours. And you think it's going to bounce from there like magic tomorrow morning? I don't think so. 1 or 2 trades can take a lot of your mental misery away. Blue. I didn't know there was a lottery ticket. I wish I had a lot more. I said buy the 75 calls. They were at $1 yesterday. They went to $5.50 to $6. End of story. You know exactly what I'm talking about. We are not at a major market top. Major market tops come when people get complacent. None of us are complacent. Not the bulls. The bears got very complacent around here. And they got their, excuse my French, asses fried. Big time. Okay? The gold bugs got big complacent. They got their butts fried. Now is the time to buy because it's on the cheap. That's just the way markets work. On that note, I'll keep on providing all the content and information that I do. Go spread the word. And in the meantime, have a great evening, guys. All right? God bless you all. God bless the USA.